Hi guys, welcome back to another video. My name is Matt Branch, and today we're going to be talking about the best strategy ever. It's called the infinite banking concept. Now, many of you might think this is a scam. That's 100% okay. Stick along to this video and I'll explain exactly why it's not a scam. Coming right out of the gate and saying it's not a scam, but I'll also say this, it is definitely not for everyone. So with that said, let's dive right into it. So what is the infinite banking concept? So the infinite banking concept is a strategy where you use high cash value life insurance, you obtain a policy, and then with that policy, it can grow over time. And traditionally, you're able to access around 75% of the value within the first year and all the way up till year 5. And that's when we traditionally, here in Canada, that's when we traditionally see the break-even point of the policy. So you can actually borrow against the value of the life insurance policy while keeping all your money growing still, like you never touched it within the whole life insurance policy on a tax advantage basis. So when borrowing against this policy, the really cool thing is you're not going through like a traditional loan. The insurance company is actually giving you a collateralized loan against the policy's cash value. And rather than going through a credit check, they just pay you within 2 to 3 days, right? There's no questions asked, deposited right into your chosen bank account. Now that's really cool because you actually control the loan terms. You actually could control when you pay that loan back. And you want to be a responsible banker and be able to pay your loans back because there is an interest rate on borrowing that money. Now, for my infinite bankers out there, understand that when we pay these loans back, we are recapturing interest that would have went to the banks if we took out a normal loan. But rather than doing that, we're paying it back to a corporation that we are part shareholder of. It's called a mutually owned insurance company. When you own a whole life insurance policy, you are now becoming part shareholder of this said insurance company. And so you actually receive a dividend at the end of the year, which gets paid right into your policy to purchase more paid up additions, which increases your cash value. So in a way, we are recapturing our interest. And the cool thing about using your whole life insurance policy is you don't have to deal with the banks. You don't have to go through any loops. You can just access your money when you need it, borrow it out, and you know your money's still working in the life insurance policy. Now, there are tax advantages to this as well. The cash value grows tax-free within the policy, and you're able to take loans against it, get a tax deduction when it's used for an investment. Now, this is not financial advice. Consult with your tax professional, but you can actually get a deduction on your taxes when you borrow money to invest. Another way it's very beneficial is the guaranteed growth within the life insurance policy. Unlike other types of investments or savings vehicles, the growth is guaranteed within the whole life insurance policy, which is really cool when it comes to people who are investing in other volatile assets, because now they can diversify their portfolio into something that grows guaranteed, but also be able to access money when they need it for those other types of investments that might be more volatile. Another cool way is the asset protection. Your cash value can't be attacked by creditors. So if someone's trying to sue you, they can't actually attack that whole life insurance policy and the wealth that you built in it. Another way it could be useful for you guys is for those people in later years of life. You can actually use it for estate planning, as the tax-free death benefit will be paid out to your beneficiaries, and that will cover any debts that you've accrued over your life. And then number one is you're just avoiding traditional banking, right? Traditional banking, you just keep your money into a savings account that does literally nothing for you. Within a whole life insurance policy, not only are you growing your wealth tax-free, you're actually growing wealth rather than just storing it in a savings account. Yes, I get it. You have to borrow your own money out, but you have to understand you're getting the cherry on top with the dividend when it gets deposited. And when you do borrow your money stays working in the whole life policy like you never touched it. So for my real estate investors, again, you understand leverage, you understand using other people's money. This is why this strategy is so powerful, because we can keep all our money working in the whole life insurance policy while it's out working for us. Now, with all the advantages I've said, there's also disadvantage to whole life. So what are those disadvantages? There's high upfront costs. So whole life is significantly more expensive than just term insurance. And there's a reason for that. One is whole life, you're actually building equity in the policy. It's kind of like renting a home versus owning a home. When you rent a home, obviously it's going to be a little, well, now that we're in Canada, there's a point to be made. Would you rather own the home and build equity over time, or just simply rent it and never get, never actually be able to own that asset? Another con potentially to whole life is it does take some time to build cash value. Traditionally, your break-even point of these policies is around year 5 in Canada. So it will take time to actually build up the same amount that you've put in. Now, with that said, you can traditionally borrow up to 75% of the amount that you put in year 1, slowly growing up till the break-even point, which is when, how much you put in is equal to your cash value. Obviously, I've already talked about it, but another con is you do have to pay interest on the money that you're borrowing out of your whole life policy. But when done correctly, you get a tax deduction because you are borrowing to invest. And if you know anything about that, when you borrow to invest, you can actually write that tax. You can get a tax deduction on the interest that you're owing. By no means is this get rich quick either. Traditionally, people with higher income will benefit more from this. People with sustainable cash flow, people with higher cash flow will benefit more from this because you can fund a policy more aggressively, which allows it to grow faster. And then last but not least, there is one more con to this, and that is your money is kind of tied up in the whole life insurance policy for the earlier years in some way. Now, there's ways to get around that. I'm not going to get into it, but traditionally, for just the average person, you have to understand that there is a cost to putting money into a life insurance policy. There's still a cost of insurance. And so there's a portion of your money that you won't have access to in the first couple years. So my final thoughts on infinite banking: I love it. I do it myself in my daily life. I've been doing it for 5 years now. Now I'm showing people how to do it themselves. Infinite banking isn't this magic get rich quick strategy, but it's get rich guaranteed. And it's a great long-term strategy, especially for real estate investors, business owners, and people with ample cash flow. Now, before diving in to the infinite banking concept and going to any John Doe in the industry, you want to work with an infinite banking practitioner that has gone through the proper training and setting up these life insurance policies with a track record of having clients, having success stories and testimonials. That's me. Look at, here are my testimonials all across the screen. These are people that have worked with me in the past, and I've been able to set up policies and then coach them alongside them, hold their hand, understanding their situation and where they want to go, understanding their goals, their objectives. I've been able to attach myself to their business, coach them completely free. But not only that, structure the policy in a way that makes sense for them. Not one whole life policy is made the same. All whole life policies can be created differently. So if you go to the wrong advisor, they can set you up completely wrong and leave you financially devastated. And I'm not even joking. I've been able to review thousands of illustrations now. I know the difference between a properly structured policy that's going to be able to grow cash value for you and be able to meet your goals in the end versus someone who set up a improper policy is going to devastate them in the long run. With that said, guys, that's all for me. If you guys want to get started with a concept like this or see if this is for you, you could book the link in the description. You can have a one-on-one call with me and see if this is right for you. And obviously, at the end of the day, I can't guarantee this will work for you. And that's why we have those calls. But if you're someone with strong cash flow, real estate investor of anything, and you have a good understanding of how money works, I think this could be a great concept for you to maybe implement in your financial strategy. But that's really all from me. I hope you got some value out of it. And if you did, make sure to subscribe, like, and share this video. Appreciate your time today and have a fantastic rest of your day.